In 2014, China's Anbang Insurance bought the Waldorf Astoria in New York for almost $2 billion. It heralded a buying frenzy of U.S. properties by Chinese companies. Chinese direct investment in the U.S. hit a peak of $46 billion in 2016. A lot of that direct investment has vaporized. According to Rhodium Group, in the first 5 months of this year, Chinese FDI to the U.S. totaled just $1.8 billion. That's a drop of more than 90% as compared to the same period a year ago.
The massive drop in Chinese investment is due in part to the greater hurdles Chinese companies have to jump over to get approval by CFIUS, the government committee that vets international acquisitions of U.S. companies for national security risks.
U.S. President Donald Trump believes the U.S. has gotten a raw deal in trade with China. CFIUS has increased its scrutiny of Chinese investments under his administration. Rhodium Group says CFIUS and other U.S. regulators have derailed 8 pending deals worth more than $2 billion this year. They include Ant Financial's bid for MoneyGram. But Rhodium Group says CFIUS isn't entirely to blame for the drop. Investment began falling sharply in 2017 after China imposed stricter restrictions on capital outflows. That year, Beijing said it would limit overseas investments in sensitive areas that included real estate, hotels, and entertainment.
It is still inordinately difficult to get money out of China to go into U.S. direct investment other than what the Chinese government says is okay. And guess what? Most of that is stuff involving the acquisition of technology that CFIUS doesn't want them to have.
Rhodium Group says the money from China isn't likely to start flowing back to the U.S. anytime soon. The Trump administration is seeking more restrictions on Chinese investment, not less. Karina, CGTN, New York.